Thousands of trucks ready for sale, just sitting unused in lots.
America's truck market is cracking wide open, and nobody's ready for what comes next. 500,000 pickups are sitting unsold on lots, prices are being slashed to the bone, and dealers are quietly bleeding millions every day. But behind the discounts is a story no one wants to tell, because it reveals how fast this entire system is unraveling. So why are once unbeatable trucks suddenly poison for dealerships? Who's going to pay the price when the collapse accelerates? And how much time is left before the floor completely falls out? By the end of this video, you'll see this isn't a sale, it's a warning. Nissan Titan. It entered the American full-size pickup market with big ambitions. The Titan was supposed to challenge the Detroit Giants head-on, but instead it has become a symbol of how difficult it is for an outsider to win in a segment dominated by tradition. Trucks are not just vehicles in the United States. They are tied to identity, legacy, and regional culture. Ford, Chevrolet, and Ram each carry decades of credibility in this space, with generations of loyal buyers who would never consider switching brands. Nissan, by contrast, lacked that heritage. The Titan never inspired the same confidence, and from the beginning, it was fighting an uphill battle. Dealers are now staring at an uncomfortable reality. More than 150 days of unsold Titan inventory clogging their lots. That is nearly triple what analysts would consider a healthy supply. Every unsold Titan represents a cost, not only in space, but in financing fees. Because dealerships usually do not own the vehicles outright, they borrow against them using floor plan loans. Each truck sitting unsold costs roughly $30 to $40 per day in interest. Multiply that by months of stagnation, and the Titan becomes a money burner before it even sells. To ease the financial bleed, dealers have resorted to drastic measures. Discounts in the range of $10,000 to $15,000 are becoming the norm. Some stores are even stacking incentives: 0% financing for 72 months, bundled service plans, or trade-in bonuses that would have been unthinkable 2 years ago. Yet even with aggressive offers, Titans often sit untouched, largely because buyers know what dealers are reluctant to admit. Resale value is abysmal. Depreciation hits harder on discontinued models, and Nissan has officially abandoned the Titan. That decision spooks potential owners who worry about long-term support, parts availability, and future value. A Ford F-150 or Ram 1500 will hold its value far better, not only because of stronger demand, but because those brands are guaranteed to keep investing in the product. The Titan, by contrast, looks like a stranded asset. The only buyers who can truly benefit are those planning to hold on to the truck for a decade or longer. For them, resale value matters less, and the upfront savings can be worthwhile. But for most consumers, the Titan represents risk without reward, a truck without a future. Nissan aimed to break into the big leagues, but the Titan's decline shows just how unforgiving the American pickup market can be. But while Nissan quietly bows out of the full-size game, one so-called luxury pickup is getting crushed by its own sibling, and dealers are struggling to explain why anyone should pay more for it. If you're finding this eye-opening, make sure you subscribe right now, because the deeper we go, the uglier it gets. The trucks dealers can't give away today could reshape the entire market tomorrow, and you'll want to know which ones are next. GMC Sierra 1500. On paper, the Sierra 1500 should have been a slam dunk. GMC positioned it as the more refined alternative to the Chevrolet Silverado, offering upgraded interiors, subtle design tweaks, and a brand image aimed at customers who wanted a touch of prestige in their pickup. In theory, it straddled the line between mainstream and luxury. In practice, it created confusion, and that confusion is now visible on dealer lots across the country. Today, inventories have swollen past 50,000 unsold Sierras, representing a 116-day supply. To put that in perspective, 60 days is considered balanced. Anything more than 90 days starts ringing alarm bells in the industry. The oversupply suggests demand is far weaker than expected, even though the Silverado, mechanically nearly identical, continues to move at a stronger pace. The core issue is cannibalization. When customers cross-shop, they quickly realize the Silverado offers the same capability for thousands less. The Sierra is supposed to be the premium option, but buyers increasingly struggle to justify the price difference. Dealers admit the problem openly. Sales consultants report that customers often ask why they should spend $7,000 or $8,000 more on a Sierra when the Silverado tows the same, drives the same, and delivers almost identical performance. Without a compelling answer, dealers have leaned heavily on incentives. 0% financing for extended terms, 10-year warranties, free maintenance packages. All of these are being deployed just to move metal. These tactics reduce dealer profitability, but are seen as necessary to prevent inventory from rotting on the lot. The design cycle has made matters worse. Ram and Ford have rolled out significant updates, introducing larger touchscreens, advanced safety tech, and cabins that border on luxury SUVs. The Sierra, meanwhile, feels dated. Its interior materials do not live up to its premium billing, and buyers who sit in both trucks side by side often find themselves unimpressed. In an era where perception is everything, that is fatal. GMC's strategy has effectively placed the Sierra in a no-man's land. Too expensive for value-driven buyers, yet not differentiated enough to command luxury loyalty. Unless the next redesign creates a clear distinction, the Sierra will remain stuck in Silverado's shadow. For now, dealers will keep dangling bigger incentives, but the underlying issue is structural. The Sierra has lost its identity. At least the Sierra still carries some brand prestige. The next truck on this list was supposed to blend Jeep's off-road heritage with pickup practicality, but buyers are steering clear in droves. Jeep Gladiator. When Jeep unveiled the Gladiator, it seemed like a guaranteed success, a Wrangler with a bed. The formula looked unbeatable. Jeep enthusiasts had been asking for a pickup for years, and early hype was massive. But fast forward to today, and reality paints a much different picture. Sales have collapsed by more than 50% since 2021, leaving dealers holding more inventory than they can reasonably move. Why such a sharp decline? Price is a big part of the story. The Gladiator entered the mid-size truck segment, positioned as one of the most expensive options. In theory, buyers would pay extra for Jeep's off-road credibility. But in practice, most mid-size truck shoppers are budget-conscious. They look at alternatives like the Toyota Tacoma, Ford Ranger, or Chevrolet Colorado and see more features, better on-road manners, and lower prices. The Gladiator's off-road edge isn't enough to justify thousands more in monthly payments. Then there's daily driving comfort. Off-road hardware like solid axles, high ground clearance, and removable doors make the Gladiator unique in its class. But those same traits punish owners on pavement. Reviews consistently cite vague steering, bumpy ride quality, and fuel economy that lags behind even some full-size trucks. Customers who arrive excited by the look and capability often leave unimpressed after a test drive. Dealers themselves acknowledge the pattern. Initial interest is strong, but once buyers get behind the wheel, enthusiasm fades. Another problem is stagnation. Competitors in the mid-size segment have been refreshed aggressively. The Tacoma just entered a new generation with hybrid options. The Ranger has a modern redesign, and Chevrolet's Colorado now offers more technology and a refined cabin. The Gladiator, meanwhile, is largely unchanged since launch, making it feel dated in comparison. Faced with this reality, dealerships have resorted to steep discounts. $8,000 to $10,000 off MSRP is increasingly common, especially on high-end Rubicon and Mojave trims. These models once commanded premiums. Now they linger on lots until dealers throw in cash, rebates, accessories, and long financing terms just to move them. For hardcore Jeep loyalists, the Gladiator still holds appeal. It remains unmatched for trail capability in the mid-size market. But for mainstream buyers who need a truck that doubles as a daily commuter, the compromises are glaring. Unless Jeep delivers a major redesign that improves comfort and efficiency, the Gladiator will remain a tough sell. But while Jeep struggles in the mid-size segment, America's best-selling truck is facing an identity crisis of its own. Ford F-150. For decades, the Ford F-150 has been the undisputed king of trucks. It has topped sales charts for more than 40 years, becoming both a cultural icon and a profit engine for Ford, which is why today's situation is almost unthinkable. More than 120,000 unsold F-150s are sitting on dealer lots nationwide. For the market leader, that level of excess inventory is unprecedented. The root of the problem lies in pricing. The F-150 has steadily climbed from being a working-class pickup into near luxury territory. Fully loaded trims now top $80,000, and even mid-level models regularly push past $60,000. That shift made sense when interest rates were low and buyers stretched for premium features. But with today's higher borrowing costs, monthly payments on these trucks have ballooned by hundreds of dollars. Many traditional truck shoppers who once saw the F-150 as attainable are now priced out. Another factor is complexity. Modern F-150s are packed with features like hybrid drivetrains, massive touchscreens, advanced towing tech, and even hands-free driving systems. While these innovations impress on paper, they alienate buyers who just want a simple, durable work truck. Some customers walk into showrooms looking for a straightforward hauler and walk out shocked by the price tag and the gadget overload. Ford has also diluted the F-150's identity by expanding its lineup. The compact Maverick appeals to cost-conscious buyers. The midsize Ranger targets those who don't need a full-size. And the electric Lightning draws early adopters. Together, they've created internal competition that leaves the F-150 in a strange position. No longer the default choice it once was. Dealers, under pressure to move stock, have shifted from marking up trucks above sticker to aggressively cutting prices. $5,000 to $8,000 off MSRP is increasingly common, with extras like bed liners, tonneau covers, or extended warranties thrown in as sweeteners. Sales managers admit they've never seen this level of discounting on the F-150 in their careers. For buyers, this presents an opportunity. For Ford, it's a warning sign. If even the F-150, the brand's most important product, is struggling, it raises questions about how sustainable current strategies are. And if the F-150 slipping sounds bad, its electric twin has turned into a nightmare for dealers. Ford F-150 Lightning. Ford's all-electric F-150 Lightning was marketed as the future of trucks, a symbol of innovation that would carry the F-Series into a new era. At launch, it generated enormous buzz, with waiting lists and sky-high resale prices. But fast forward, and that excitement has fizzled into a harsh reality. These trucks are now sitting unsold, dragging down dealers and forcing Ford to slash production targets. The biggest challenge is range anxiety, especially under real-world conditions. On paper, the Lightning offers up to 320 miles of range, which sounds competitive. But once owners start towing or hauling heavy loads, the very tasks pickup buyers demand, that number plummets. Many owners report losing 40 to 60% of usable range while towing. That means a truck advertised to travel 300 miles may need a recharge after barely 150. For contractors, haulers, or road trippers, that's a deal breaker. This problem feeds into another: charging infrastructure. While city drivers may find stations nearby, those who need to tow long distances often find themselves planning trips around sparse charging locations. Combine that with long recharging times compared to a quick gas fill-up, and the Lightning begins to feel like a compromise rather than a revolution. Dealers have noticed, and many are reluctant to stock the trucks in large numbers. Some openly admit that they sit for months, even with heavy incentives. Ford is now offering $15,000 to $20,000 off MSRP to move units, and in some cases adding special financing programs to sweeten the deal. But even steep discounts can't mask another issue: plummeting resale values. Used Lightnings, once prized for their rarity, are now selling for tens of thousands less than their purchase price within a year. This collapse in value has scared off buyers who might otherwise have considered making the jump to electric. After all, no one wants to spend $80,000 on a truck that could be worth half that in just a few years. The Lightning has gone from being Ford's EV flagship to a cautionary tale about overestimating demand. For Ford, the Lightning's struggles highlight a broader challenge: how to balance innovation with consumer expectations. For dealers, it's another headache in a market already flooded with unsold inventory. For buyers willing to live with the compromises, the deals are incredible. But for most, the Lightning remains an experiment that has yet to prove itself. Electric trucks aren't the only ones flopping. Even traditional gas models are piling up faster than dealers can sell them. Chevrolet Silverado 1500. The Silverado 1500 is one of the most recognizable names in the American truck market, but recognition doesn't always equal momentum. Right now, more than 100,000 unsold Silverados are gathering dust on dealer lots, making it one of the most overstocked full-size trucks in the country. The reason is not that it's a bad truck. It's that it's become the oldest design among the Detroit Three, and buyers can tell. The last major redesign arrived back in 2019. Since then, Ford and Ram have pushed forward with updates that highlight advanced technology, bigger screens, and more premium cabins. Ram, in particular, has leaned into comfort, making its interiors feel closer to luxury SUVs. The Silverado, by contrast, hasn't kept pace. Step inside, and you'll still find harder plastics, smaller displays, and an overall layout that feels like yesterday's truck. In a market where shoppers are increasingly tech-driven, those shortcomings stand out. Performance-wise, the Silverado remains capable. It can tow and haul with the best of them. But capability alone isn't enough anymore. Buyers want a truck that feels modern, connected, and comfortable, especially at the high prices trucks command today. With rivals offering more polish at similar costs, the Silverado looks dated, and that perception has a direct impact on sales. Dealers have been forced into aggressive discounting to make room for newer inventory. In many markets, $5,000 or more is being shaved off MSRP, and in some cases, dealerships are even selling at or below cost. Sales consultants admit that trucks sitting longer than 90 days become a financial burden, thanks to interest payments on floor plan loans. Clearing them out quickly becomes more important than protecting profit margins. For bargain hunters, this creates opportunity. Shoppers who don't mind the Silverado's dated feel can walk away with a full-size truck at a price far below what Ford or Ram dealers are offering. But the bigger story here is Chevrolet's positioning. By allowing the Silverado to lag behind in design and interior quality, GM has given up ground in a segment where competition is relentless. Until a proper redesign arrives, dealers will likely continue throwing money on the hood just to keep inventory moving. And if Chevy's oldest full-size truck feels dated, Ram's latest disaster is drowning dealerships in inventory. Ram 1500. Not long ago, the Ram 1500 was considered the rising star of the full-size truck market. With a smooth ride, plush interiors, and bold styling, it carved out a reputation as the more luxurious alternative to Ford and Chevrolet. But today, dealerships are staring at a crisis: a 179-day supply of unsold inventory. That's almost 6 months' worth of trucks just sitting on lots, nearly triple the healthy benchmark. How did Ram get here? The answer starts with overproduction. Coming off years of strong sales and high demand during the supply shortages of the pandemic, Ram assumed momentum would continue. Instead of scaling back when interest rates climbed and consumer confidence wavered, they kept pumping out trucks at full tilt. The market softened, but production didn't. Dealers became flooded with more trucks than they could possibly sell, creating a massive imbalance. Then came the pricing problem. While Ford and Chevrolet aggressively offered discounts and incentives to lure hesitant buyers, Ram initially held the line. They bet that customers would keep paying premium prices for what had become their reputation: better interiors and a smoother ride. But that strategy backfired. As buyers compared deals across brands, Ram's reluctance to discount made the 1500 look overpriced. By the time dealers finally pivoted, the damage was done. Today, it's common to see discounts of $10,000 to $12,000 on high-end trims like the Limited or TRX. Some buyers who initially walked away from offers are later called back with sweeter deals, proof of how desperate dealerships have become to move inventory. One finance manager in Ohio even admitted her general manager was in panic mode, staring at 87 unsold Rams on their lot alone, triple the usual stock. For consumers, this creates leverage. Walk into a Ram dealership today, and you'll likely find salespeople willing to cut deeper than ever before, especially if you're eyeing higher trims. But the situation also highlights how fragile the truck market has become. If a once-hot model like the Ram 1500 can suddenly turn into a burden, it shows just how quickly demand can evaporate when affordability drops. Ram still has brand loyalty on its side, and that may cushion the blow. But right now, dealers are focused less on profit and more on survival, and that means bargains for buyers who know how to negotiate. But while Ram can at least rely on brand loyalty, one midsize competitor is fighting an uphill battle it may never win: Honda Ridgeline. Honda entered the truck world with a different vision. The Ridgeline broke from tradition by adopting a unibody construction rather than the body-on-frame setup that defines nearly every other pickup. In theory, this design offered advantages: smoother ride quality, better handling, and a car-like driving experience. On paper, It seemed like a clever way to appeal to buyers who wanted truck utility without the compromises of traditional models. But in practice, it never caught on. The biggest problem is perception. Hardcore truck buyers often dismiss the Ridgeline as not a real truck. While it can tow and haul, it doesn't match the maximum capabilities of rivals like the Toyota Tacoma, Ford Ranger, or Chevrolet Colorado. In a segment where strength and ruggedness define reputation, the Ridgeline's unique design left it looking like the odd one out. Sales data reflects this struggle. The Ridgeline has consistently trailed behind its competitors, and dealers now report that inventory lingers far longer than expected. With rows of unsold trucks taking up space, Honda has been forced to lean on incentives. Heavy discounts, low-interest financing, and bundled deals are becoming more common as stores try to clear out stock. Some dealers even offer trade-in bonuses or extra warranty coverage, acknowledging that the truck needs sweetening to move. The issue isn't just performance. Rivals have evolved rapidly, with the Tacoma and Ranger undergoing modern redesigns and the Colorado offering updated technology and improved interiors. By comparison, the Ridgeline's updates have been incremental, leaving it feeling dated in a competitive field. Buyers cross-shopping quickly realize they can get more capability and often more features for a similar price elsewhere. And yet, the Ridgeline does have strengths. Its ride quality is superior to most body-on-frame competitors, making it appealing for suburban families who use their truck for light hauling or weekend projects. The problem is that this niche audience isn't large enough to carry the model in a crowded market. For Honda, the Ridgeline represents both innovation and miscalculation. The concept was bold, but the execution didn't resonate with the core truck audience. Unless Honda radically repositions it, the Ridgeline will remain stuck as the truck that never truly fit in, one that dealers are increasingly desperate to unload, and finally, the truck that was supposed to be a bold new chapter for its brand, but instead turned into a financial black hole. Nissan Titan XD. When Nissan rolled out the Titan XD, it was pitched as something revolutionary, a truck designed to bridge the gap between traditional half-ton pickups and heavy-duty workhorses. On paper, it sounded like the best of both worlds. Buyers would get more towing capacity than a standard truck without committing to the size, weight, and price of a true 3/4 ton. But in reality, that middle ground positioning became the Titan XD's downfall. Instead of appealing to everyone, it confused the market and ultimately attracted almost no one. Truck buyers tend to be decisive. Contractors who need serious towing muscle know they need a Ford F-250, a Ram 2500, or a Chevrolet Silverado 2500. Weekend warriors or light-duty owners are perfectly happy with half-ton models like the F-150 or Ram 1500. The Titan XD sat awkwardly in between, more expensive than half-tons, but unable to match the durability or capability of the heavy-duty segment. That identity crisis meant it never established a clear customer base. Sales figures tell the story. The Titan XD performed even worse than the standard Titan, which was already struggling. Dealers found themselves staring at rows of XDs collecting dust for months, with some stores reporting that they couldn't move a single unit in an entire quarter. Every day those trucks sit, they rack up financing charges for the dealer. Eventually, managers are forced to slash prices, often selling them at or below cost just to clear space. It's not uncommon to see Titan XDs discounted more than $15,000 simply to generate cash flow. Nissan's larger strategic retreat from the full-size truck market only amplifies the problem. When a manufacturer signals that it's pulling out of a segment, buyer confidence evaporates. Prospective owners worry about long-term parts availability, support, and resale value. Why sink money into a model that might feel like an orphan just a few years down the road? For the Titan XD, already struggling to justify its existence, that perception was the final nail in the coffin. Today, the Titan XD has become more than just a failed experiment. It's a symbol of Nissan's collapse in the American truck arena. Dealers are desperate to unload the remaining units, offering steep discounts and creative financing packages. But the reality is harsh. The market has spoken. Consumers want clarity, tradition, and proven capability in their trucks. The Titan XD, by trying to be everything at once, ended up being nothing at all. For buyers who don't mind keeping a truck long-term and ignoring resale value, these fire sale prices may seem attractive, but for the industry as a whole, the Titan XD will be remembered not as an innovation, but as a misstep that highlighted just how unforgiving the US truck market can be. So, would you take one of these trucks at fire sale prices? Or are they all just money pits waiting to happen? Let me know in the comments, and if this breakdown gave you a new look at the truck market, don't forget to like, comment, and subscribe, because this collapse is only just beginning, and I'll be tracking every twist.